Hey guys, what's up? It's Shane here from AwakeFX. Welcome to this trading channel here. Now today what I was going to do is speak about Fibonacci retracements, Fibonacci extensions. I had a few people write in the comments, Shane, look, how do I get my Fibonacci's to look like you? How do I put the percentages on them? Can you change the Fibonacci levels? Is it customizable? The good answer is actually yes, it is. So what we'll do is we'll look at how to customize the Fibonacci indicator for TradingView specifically, and we'll have a look at a few charts and I'll show you examples, let's say, of retracements and extensions playing out, so maybe you then can use Fibonacci as part of your trading strategy. Now, I'm a full-time trader. I'm based in Ireland here. I've been trading for 15 years. So if you do enjoy trading content, make sure to subscribe to the channel so you don't miss out on future videos from me. So without further ado, let's have a look at the charts. Okay, guys, we're looking at a blank screen above my head here, and I'm going to do a little bit of drawing on it first, just to speak about trends, how markets move in general, and then how you can use your Fibonacci. And I'll show you how to use the settings. Don't worry, we'll get the settings all right for you as well. But we'll show you how to look at the charts and how to visualize how the market moves. So for example, a market will never move up in a straight line. We all know that. It has to move up. There are pullbacks. It moves higher, lower, whatever. If market moves higher and then kind of pulls back to the previous low like this, and it keeps moving to the previous high, moving down to the previous low, and it's more kind of like this, you would see that as a sideways market. It's consolidation. Prices stuck here between this kind of high point here and then between this low point down below. There's no real trend when you see price moving like this. So let's say price is moving in an uptrend, which is a little bit different. You'll have a move from a low point to a high, some kind of pullback, move up to a higher high, pull back to a higher low, then you have a move to a higher high, a pullback to a higher low, and so on. And if you look at this here and you want to be a trader and you want to buy the market with the expectation the price is going to be moving higher, where's the best place to buy there? Well, I would say if price is moving higher like this, the best place to buy is at these pullbacks, because once price is pulling back, if you can buy there, you don't get much drawdown, and if price continues in your direction, you get a nice profit. So how do you determine where these pullbacks are? That's where we use a Fibonacci retracement tool. And for example, the way you would use it is you would plot. This is the tool down here in the bottom left. Let me just show you that there. Here, it looks like this. That's the Fibonacci tool, Fib retracement tool, they call it. And you'll be anchoring from the move, the longer move up. So from this swing low here up to this swing high here, we can see price pull back down. And this orange line here is the 50% level. See here on the right-hand side of all the different percentages. And it pulled back to the 50% level here and then moves up to the previous high. That's the first point you'd expect price to move to, which is the low-hanging fruit exit of a trade, or hold it till it continues on perhaps to the negative 23.6% extension, which is this over here, this green line. So let's just zoom in here a little bit more. I'll just show you this Fibonacci retracement tool, how you can customize it, how you can change the colors and make it look a little bit like what you have on the screen here. So the main Fibonacci levels I would be looking at, and I recommend beginning with or starting with as a trader, is this 50% level, and then the blue line here, which is the 62% retracement level. Okay, so if price moves from point A down here to point B, if price pulls back or moves lower, the halfway back or the 50% retracement is to this point here. So let's say this was a stock and price had moved from $100 to $200. This 50% retracement level here would be the $150 mark, and that could be a good area to buy. Looking at this and looking at where price can potentially go, price can potentially move from this point up towards the previous high if the trend continues, and generally beyond that. And if price moves beyond the previous high, oftentimes you will see that around this negative 23.6% Fibonacci extension level, price many times will kind of terminate there before pulling back for the next move. Okay, so the profit to be made is in the move from point A here to point B. Okay, that's where you're looking to get in of a trade, get out of a trade, or possibly even get out at a previous high. Now, price doesn't always pull into a 50% level like this and bounce. The 50% level and the 62% level is more like a zone. So price can pull back, let's say, anywhere in this kind of level here. Okay, so this is a place to be hunting potential long trades. Now, how do you get the settings on your Fib tool to look like mine? So in TradingView, I'll just show you this now. So if you double click on the Fibonacci tool, these are the settings I have here. So I've got trend line, and I've chosen this blue color, which is nice. I have this dashed line. The levels, I have it the second bigger level here. And I have extend lines right. Okay, let's put this here. Extend lines to the right. If I remove that, what will happen is you'll see your Fibonacci retracement like this. Okay, it doesn't extend the lines to the right. Now, I had someone ask me, how do you put the percentages onto the Fibonacci retracement? So we'll look at that now here as well. If you scroll down the very bottom, there is an option here, levels. Do you want them as percents or values? Okay, if I change this levels to values, it'll have the 0.5 Fibonacci level, 0.62, or you can have percents, it'll have the percentage. Okay, some people may have the prices on it. So it has prices here. I unclick prices. Okay, so the way I have it set is levels, percents, text, center, middle, font size 12. Okay, there's no background color. I don't like background color, so switch that off. Or you can just untick background. Then it's the levels. What levels are we looking to have on our Fibonacci tool? Well, the most important one is this 0.5. Okay, I can click it on, click it off, 0.5, and you can choose your color. You can customize it. Maybe you don't like to have orange. I like to have orange as my 50% level, 0.5. The 0.62 is the 62% retracement level. Okay, I can change this. I could change this to a 60% retracement if I want, but the 62% is the standard, or 618 is the actual level that is a standard Fibonacci level you may see already built into your Fibonacci retracement, 0.618, the 61.8% retracement level. I just rounded up personally to 62. You click this box here, I've chosen this nice dark blue, and I have the zero line here is this kind of dark gray. I have my 1, which is also the dark gray. That's the line, this line here, the 0% and the 100%. That makes them gray. Then I've marked in minus 0.5 in white, minus 1 white, minus 1.5 white, minus 2 in this kind of gray color. And I'll speak about these in a few moments. And then this minus 23.6% is this tick box, minus 0.236 there. Now I can change this. You know, I generally change this to 22. You know, it's not a Fibonacci number, but I like sometimes to have that line a little bit lower. Okay, because sometimes price may make its way towards the 23.6% extension, but maybe turn before it. So I may just adjust that lower for my own personal trade to minus 0.22, and you can do that too. So they're the main levels to look at here. Okay, again, see the way it's not extended to the right. I'd like to extend this to the right, so I'll double click, extend lines right here. Boom, done. Okay, and that's it. That's all it is. So let's use this tool to see if we can find trades, potential trades on the euro dollar. Now I'm going to have to go through some historical data to show you how this works, but we're looking for kind of moves where prices kind of move strongly upwards and see, can we identify pullbacks, and does it pull to the 50%, 62%? Does it pull back in this zone before price resumes higher on uptrends? And does price indeed hit this negative 22% level? Okay, and then the opposite is true for downtrends. When you're plotting a Fibonacci and you see there's a downtrend, a move from a high to the low, lower high, lower low, a big move down like this, you're wondering, well, where's the next pull back higher. So I would use the Fibonacci and I'd anchor it from this previous swing high down to the most recent low. And I would be waiting for price to move back up, you know, into this zone here, 50 to 62%, to hunt a short trade. And my expectation would be that price would move lower towards this previous low and potentially break it and onto this negative 22% extension. Remember these other levels, extension levels in white. So you see here, I have minus 50%. Sometimes price, if it's really bearish, selling off hard, it may run all the way to negative 50% or the negative 100% extension. It is quite rare. Now, usually price will hit maybe the negative 22, possibly the negative 50, but it does tend to want to pull back before continuing lower. Okay, so if you are getting into a short trade around the 50% level, you know, you want to be getting out in this zone, or otherwise you have to sit through this pullback before price may potentially continue lower, or it could also reverse. Okay, so let's have a look at the chart. Let's see, can we see some examples here of this in action? So here's a euro dollar chart, guys. We're just going to do a little bit of a bar replay on this one. You can see it's a 15-minute chart. It is euro dollar. Price has been kind of moving in this series of lower highs and lower lows. We've moved from this high, and price has kind of been selling off here in this downtrend, okay, on the 15-minute chart. And there are times when you have a downtrend like this, and price will then break the trend and potentially move higher. So in order to know when the trend is broken, you have to look at these lower highs, lower lows, lower highs, lower lows. Here's the last lower high here. And I have done a video before on this. Check out my channel on market structure. But this is the level at which the market structure would change. It's the market structure shift level is what I call it, you know. So if price gets up above this and has a, you know, a strong close above this level here, there could be a chance then that price will pull back and maybe start a new trend up and away like that. Okay, so I do wait sometimes for trades such as this. They're called reversal trades, where price is making a downtrend, and then I'm looking for a break in trend, and then I'm looking to get long and buy in a new uptrend. Okay, so this is a market structure shift level here. Let's see what happened here. Let's see how you can use Fibonacci to help you then in your trading. So we move forward here with this bar replay. So move forward and price breaks that level there, not really by much. Okay, let's see, we can move here on a bit more. Okay, price is kind of broken that area there. Okay, it's properly broken. So maybe we're at the start of a new trend here. So where do we buy? Well, when we've got a move up like this, a nice move up starting this new trend, I don't want to buy up here because I know price can always pull back before moving higher. So the area I would be looking or hunting for trades is kind of in that 50% to 62% retracement level on the Fibonacci tool. So what I would do here is I would pull a Fibonacci from this swing low, the absolute swing low down here, to the highest high on the right, which is right here. And I would wait. I would wait and wait and wait until price gets back down around this level. Then I would hunt a long trade to buy. So we move our Fibonacci to the highest point on the right. Now, as we move forward, if price continues higher like this, we still drag up our Fibonacci tool to make sure we have this long stretch here measured out and wait here around the 50% level for a potential trade. What happens here? Price comes down, very close there. Doesn't quite make it, you know, but I wanted to touch. Personally speaking, I wanted to touch the 50% level. Bam, we get a touch there. Then we could hunt a trade and potentially take a long trade from that level. Just to give you an idea, okay? You may have a stop, let's say a 10 pip stop. You're looking to make a trade towards a targeting, let's say this negative 22% extension up here. So you may have a 20 pip target, let's say. Let's adjust that. There's 20 pips. And maybe a 10 pip stop loss, a 2-hour potential trade. So you may buy here because prices came back into this Fibonacci retracement level. So let's move forward and see what happened here. Oh, okay, price came and pulled down again. Boom, eventually hits the previous high, okay, over here. That's the low-hanging fruit. To enter a trade here, exit this previous high right here, is the low-hanging fruit. You could exit a trade right there. Okay. Potentially then, instead, you could possibly wait for price to move higher into maybe the negative 22%. Okay. Do we get up there? We do. Okay. It takes a little bit longer. But that's kind of how you're using Fibonacci retracements, and see the negative 22%, that extension, as a target on your trade to exit a trade. Imagine if you missed this trade. Okay. Let's say you didn't get in here. Okay. For example, and it was kind of later in the day and price was, let's say, over here somewhere, right? And you've missed a trade. Price has kind of already kind of broken this high here, but has not quite got to the negative 22% yet. Sometimes you can get a pullback again before price will continue and hit that level. Okay. So if I was, let's say, looking at this here, and I only seen this right now, and I missed this entry here, I may zoom in here, for example. Okay. And this is quite important. And I may pull a Fibonacci from, see this recent swing low here that pushed up above this high here. I may measure Fibonacci from that low up to the highest point here and see, maybe is there a possibility for another entry here with the goal of price moving up towards the larger target. Okay. That kind of thing. So let's see in this scenario what happens. See, price came down into that 50% level again. Okay, that could be an area then to buy in that zone. What's the target of that 50% retracement? Well, there's kind of two targets really. Price could potentially get to the negative 22% of this smaller Fibonacci. But remember, we're in this bigger pullback here, which has a target of this negative 22%. Okay, so it may be even more prudent to get out at this level here, okay, instead of waiting for your trade to go even higher. What happened anyway? Let's see. Bam, it went to both targets. You know, so that's how you can use your Fibonacci in your trading. It's the opposite for shorts. You know, you anchor your Fibonacci the opposite way around. Let's see if we can see any example here of that. Obviously, this was the long trade with price kind of moving up. Like there was a downtrend here prior to this. You know, if we look at this, here's the highest point here of this downtrend. What kind of candle is this actually at the high? This is what I would be calling an inverse hammer. Do you know? We have a long wick above all this price action. Price broke lower here. We broke market structure. Okay, so price was prior to that moving from this low to this high, higher low, higher high. Then what happened? Bam, we broke. We closed below this low. Okay, when you see that, this pullback higher can be an area to get into the trade. You know, so let's say if we bar replay this back to, let's say this point here, let's say you were witnessing this in real time. Okay, we've been moving in this uptrend and we're waiting for the trend to break. And we see, okay, look, price has topped out here. It's had this big push down. We've closed below this low here. Oh, I'm interested in a short. Do I want to sell short right here? No, I want a retracement, some form of retracement. So if I get my Fibonacci tool from the swing high down to the swing low, wait for price to potentially come up into this area. Not exactly the 50, could hit the 50, could hit the 62 in that general zone. And you could potentially be hunting a short trade, you know, in here. Do you know? Where could you put your stop? Well, above the high, ideally. You know, you're looking to always make about 2 or in the trade, I recommend. If you're getting in at the 50%, where do we know price has a good likelihood of going? To the negative 22. You know, you could have a stop, let's say somewhere like here, you know, get a 2 or, you know, 2 or trade, maybe you risk, you know, 4 pips to make 8 or 3.5 pips to make 7, you know, that kind of thing. So you wait here, what does price do? It moves lower. So when it moves lower like this, what do? You drag the Fibonacci tool down. You may adjust your entry in around this level here. The bigger the push down, the more range you're going to get out of the trades. You might get 8 pips or 9 pips of target here. You may have to have you know, a slightly larger stop loss. We move forward, bang. Where does price come into? 50% area. Will she turn? Well, potentially. Boom. She turned right there. It's not by chance. It's a fantastic tool. Where does she go? Negative 22%. It's really like magic, you know. Is there anything else in here that would also give you a reason to take this trade? Now, depending how experienced you are, you may or may not notice this or see this, but at this 50% level in this zone, there was also a bearish fair value gap. A gap between this candle's low and this candle's high, right there. That can be an added confluence to take this short. Okay, I have done lessons on fair value gaps. It's fantastic when you use it with Fibonacci as well. Okay, so make sure, guys, you're going to like and subscribe to this channel now after me sharing this with you, and make some comments down below. If there's any other videos you want, whatever, we can do that. And another thing as well, I live stream each day with my students. I've got students where I do live streaming in real time, catching trades. If that's something you're interested in, just check out the description of this video down below. But anyway, back to this trade and back to this this area here. So prices pulled back in this downtrend into this 50% and ran here to this negative 22. So you just get out of the trade there. Done. Do you know what happens then? Oh wow. Okay. This was an example where price can sometimes push on to the negative 50% extension, push on down to the negative 100, but it doesn't happen all the time. You know, it's more prudent or a safer option to get out of that negative 22. You know, so don't ever feel bad you see this huge move like that. Sometimes when you see a huge move like that, well, maybe we should make a Fibonacci pullback of this leg down. Okay, so looking at this here, if you see this move, you look at the trend. What's it done? It's moved from a high, low, pullback, pushed all the way down here. Okay, so maybe there's another pullback we could get into for a short trade, for a move lower. How do we find this potential pullback? That's the magic we're looking to find out here. How do we hunt that? Let's pull a Fibonacci from this swing high here down to this low. Why am I using this swing high instead of the swing high at the top? The reason why I'm using that is because that was where the last pullback higher went. That pushed the price lower. So that's why I'm anchoring from that swing high to the swing low. There's been no real pullback yet. So this would be an area then in here to be hunting a short position, potentially again. Okay. There's a much larger push here, you know, so the distance from that 50% down to this negative 22 is much bigger. Look, it could be like an 18 pip distance. So you want at least half of that as a stop loss, maybe a 9 pip stop loss, 18 pip target. There's a 2-hour trade. Let's see if price can get in here. What it does, it moves lower. We drag our fib down, but it's bouncing back. Okay, so we're looking at this level as a potential area to enter a trade. She moves lower again. Okay, fair enough. Maybe we drag this down a bit further. Will she pull higher? No. Oh, very close. Boom. Comes into that area. Rejects. Are you seeing the power of this? Extremely powerful. I've been trading Fibonacci for 15 years, and it's fantastic in trading. People overcomplicate trading. I use a lot of ICT material as well. There's a lot of ICT content on this website, on this YouTube channel, but Fibonacci is, to me, it's the holy grail. Look, why else did this reject here? Another fair value gap. Bearish fair value gap. Beautiful. Exactly where you want to be hunting a trade. Price moves lower. Can we get a push down? Well, I suppose that 50% level is there. The negative 22% is down here. So you're looking at around, you know, about 20 pips of potential profit there. Give it a 10 pip stop loss. You know, give your trade, always give your trade a bit of room. Price moves lower. Boom. Straight down. You know, very powerful stuff. Now, I know I'm going to get questions in the comments. Can I do this in gold? Does this work in crypto? Do not use it on every single market. I use it on the euro dollar. Euro dollar behaves well. The ES behaves well, the S&P 500. Trying to use Fibonacci's in other markets, you may not have that. It may not be as clean as this. For example, gold. Gold overshoots and overspikes. Gold could spike up here much further in. You may get more stop outs and the price continue in your direction. There'll be more wicks and that kind of thing. So learning how to trade is not just about a strategy and an approach. It's about using it on the right market. Not all markets are the same. They all have candlesticks. They all look the same, but they're not all the same. They don't have the same behavioral moves. So that's why, I've been studying tens of thousands of hours over the last 15 years, and euro dollar, nice market to trade. If you're a beginner, don't trade any other market. Trade one market, trade the euro dollar, and that's it. That's all you need. Okay. So that's really it for the video, guys. Hope you enjoyed it. Please subscribe to the channel if you want to see more videos like this. Give us a comment down below and let me know what you thought about the video as well. And if you'd like to learn more about my live stream service or education or anything like that, check the description down below. Take care, guys. Thanks for watching and trade well. Bye-bye.